Hi, for those of you who don't know me, my name is Josh, and I'm from the Good Brothers Trading Academy. And today is my first day on YouTube, so I'd appreciate it if you hit the like button and you subscribe to the channel. Don't forget to turn on the notification bell so you can be notified each time we upload new content. Now, if you stay all the way to the end, I'm going to give you a concept that if you're a beginner and you're under the PDT rule, you will find a higher probability of success if you combine this with the technical patterns in the market. Now, first and foremost, what we're doing is we're breaking down the Roku chart. Roku is a favorite ticker of mine to trade, and the first thing that I recognize when I'm looking at this chart is this reversal pattern right here. Okay, anytime that we get a reversal pattern like so, where we get a strong bullish move up or down, depending on if we're going bearish or bullish, and if the next bar, so this would be a bullish bar, and the next bar comes down and it's under or to 50% or over on the retracement, this would be considered a reversal pattern on the stock. Now, why I bring this up is because it's very critical. We have our reversal pattern right at the resistance. Okay, this is where sellers came in to push the stock price back lower. Okay. Now, before getting into that, let's hurry up and get into the bull flag. A typical bull flag would be a move higher, a pull back, a consolidation sideways like so, and then we get liftoff. Okay, so we have the pull going up, a consolidation going sideways, and then a move higher. Now, when we're reading the technicals like so, we want to understand which bars are in control of the stock. Now, I call them power bars or control bars. Understanding what bars are in control of the stock is going to help us understand. It's going to keep us calmer in the trades. It's going to help us know where to take profit, and it's going to help us know when to stop out of the trades when we're wrong. For example, if we go ahead and we blow up this Roku chart by looking at this consolidation pattern right here, if we take this particular bar, this first bar, and we draw in our top and our bottom, and this is where history of the stock has been. So from the very bottom of the wick to the very top of the wick, this would show the range of the candle. So what we're doing is when there is a power candle in control of the stock, we are going to be watching what happens in between the range of the candle. So this would be inside bars, right? So we have our strong move up, the bullish candle itself right here. And then what we have is we have a whole bunch of inside bars. All of these, and what I mean by inside bars is they never break above or below and close beneath the range of the previous candle or the power bar candle. This causes this consolidation period. This causes what would be known as the consolidation or flag pattern before making the big move higher. Now, if the concept of control bar or power bar is cool to you and you think you're going to go back and look for some control bars and power bars on your charts, be sure to enter in the comments control bar or power bar so I know that you're following along. This is also where you can ask me other questions and so that I can engage with you to give you guys better answers. It's my goal to help you become successful in the market. Now let's take a step back, erase some of this stuff, and look back at the beginning part of the chart as we had it on Roku. That would be ticker symbol ROKU. So what I was pointing out at the very beginning is we draw in our top where we see that history has been rejected before. Okay, and now we have a control bar, for example, right here. Okay, now what we are also understanding is we get this pull move higher. We're starting to get higher lows put in. This causes this flag pattern or a pennant shape before we get the liftoff. Now, if you don't know the control bars or you don't know the reversal patterns or the particular important candles, the trend reversal candles or the high wave candles, candles that we know or have a higher probability of winning our trades, go ahead and click the first link in the description box. This is going to take you to our free Discord group where we have other videos going into much deeper explanations on how to read the technical analysis. Okay, so now what we want to look for is looking at as technical traders. It's easy to start to learn these patterns. It's easy to learn what a bull flag looks like, or for example, a double bottom. So we get this move lower in the market, we get this bottom put in, we get the relief move, and then we get another bottom put in. Now, another typical favorite pattern of mine would be the V-shaped recovery, where we get a strong move down, a relief bounce, a higher low, and then a lift off. Okay, and this could also look like a strong move down, a bounce higher, a consolidation period, and then a move higher, just like this here. So we get a strong move down, a move up, a consolidation, or a flag before making another move higher, okay? And we get into more of this, and this is something that we can go over, and if you'd like, go ahead and let me know. Now, what we want to do is we want to compare, and how this is going to make us become more successful in the market is we want to combine our technical analysis or our bull flags, for example, along with some kind of catalyst, okay? Some kind of fundamental reason. And why we want to do this is because we are typically under the PDT rule when we first get started. This means we can only take 3-day trades a week, buying and selling. So what we want to do is we want to take the least amount of money, right? Starting out, so our emotions are under control in our trades. We take the least amount, but we want to catch the biggest moves. So using the higher time frames, for example, like this 3-hour chart, and I have a 30-minute chart over here showing the V-shaped recovery. Using the higher time frames is going to allow us to get bigger moves in the market. Now, we also have videos by clicking the link in the description box below, going over the top-down approach, starting from the weekly time frames, working ourselves backwards. Now imagine if we were able to take our technical analysis like this bull flag and we wait for a news catalyst to come out, just like today on Roku. It was a news catalyst where an analyst said that the stock was being upgraded to a certain price level. This gives us the bull flag or the technical pattern to look at, and then gives us a reason or gets more eyes located on the stock, right? So if more people are looking at it and we have a news catalyst and it's a positive news catalyst saying that the stock price is going to rise and we have the flag pattern put underneath it, chances are the move is going to happen in our favor. Now, imagine this concept. Maybe we look for the news first, we find the catalysts, and then we start to look for the technicals. This is only going to give us a couple of trades a week. This is going to slow our trading down, which is good for us under the PDT rule. And it's going to allow us to work on certain patterns to where we feel comfortable so you could start to scale your position. If you want to learn more about the patterns or the V and how I play the V-shaped recovery, then go ahead and click on the next video called the V-shaped recovery, and I'll see you there.